Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. Welcome to today's Top Stock Picks. I am Jeremy Mullen, and I will be doing Ralph Lauren, ticker symbol RL. Nino will be right behind me doing hers. But first, let's get to mine. We have a company that is a major designer, a marketer, distributor of premium lifestyle brands. I'm sure you've heard of it in Ralph Lauren. They offer apparel, including a range of women's, men's, children's clothing, and accessories. This stock has rallied after impressive earnings beat, and it's really caught my eye. They have a positive outlook for 2024, which we'll discuss. And I really think the only trick here is finding your entry point in the stock that looks to be heading higher. It's been struggling for over a decade, and it's finally breaking out, finally going to take out decade-long highs. So it's pretty crucial point for the stock and investors here. So let's look at the profile page, and we'll talk about the company. And you can see here I'm on the profile page, Ralph Lauren, Zacks ranked number one, strong buy. It was founded in 1967 and headquartered in New York, New York. The company has about 15,000 full-time employees and has a market cap of $12 billion. And you see that right down here. We're a little under $12 billion. The company has a strong portfolio. You've heard a lot of these brands. I'm sure you've seen them in department stores, Polo Golf, Chaps, Club Monaco, American Living, all kinds of brands. There's many more that I can't go over. They have a lot. Now, let's look at the style scores. A in growth, that's really important to us. We want to see some growth to get this stock higher. B in momentum, BGM is A. Now, some value investors are going to be concerned. It's a value score of C. If you look back down here to the forward PA, we have a PE. We have a PE of almost 18. So a little high for some, but as long as we can grow into that PE, we're fine. The stock can continue to go higher. So let's look at the earnings here. Now I'm looking at the price and EPS surprise chart. And you can see going back to COVID, we had this hiccup here where they missed. But other than that, we really beat earnings a lot. The only problem is there wasn't incentive for investors to get into this stock. But what happened here? We definitely broke out for some particular reason, and we'll go over that. But this is an 18% beat on this last quarter. Look at this. There's plenty of great beats, 152, 157, 63, and the stock really didn't go higher except for the COVID low. So what's going on here? Well, the company affirmed 2024 guidance, and it raised its gross margins to 140 to 180 basis points versus the 120 to 170 basis points prior. Now, management credited margin improvement to reduce freight costs, favorable channel and geographic mix, and continued growth in AUR, which more than offset product cost inflation. So what we're seeing here is a more profitable company, or what investors think will be a more profitable company in 2024. That's why the stock went up. That's why investors are really excited. And analysts are excited too. Let's look at the estimates. All of them are going higher because of that 2024 guidance. So we can see over the last 60 days, we had revisions higher across the board, none lower. If you look at the actual numbers of the magnitude, we see about 7 to 8% across the board. They're going higher across all time frames over the last 30 days. And you can kind of see before, we did have some analysts get excited before the quarter for this in the short term. But looking good on the estimates. The highest price target I saw since the earnings came out was UBS. They lifted to 244 from 190. That's a significant price target raise. So UBS, very, very excited. Now, I want to look at the chart, see how we might be able to get to that price target. Let me close these tabs. All right. So here's the chart. We have, this is a multi-decade chart here. We're going all the way back to 2012, 2013 when it hit its prior high here. So, of course, this was a nice trend. This high was made from the financial crisis low, where we went on about from the $75 level to 192, and we just gave it all away. Okay, did come back into 2018, but then COVID happened, and we took out those prior lows. And really, if you just zoom in over the last 10 years, this is a sideways stock, right? This is from 125 to 125 for 10 years. That's not a lot of fun for investors. You do have a little dividend, but not enough to make you sit in a stock like this. However, what do we got here? We have this breakout, right? All right, I want to see what happened at this 45, 150 level, because that looks like a lot of resistance. So what do? I draw a Fibonacci, retracing it from highs to lows. Look what we have. We have a 61.8 that continually held up, even tried to hold for a third time before that quarter happened. It broke. Significant break here. So what do? Target the 161.8 extension. That's 263. That's even more aggressive than UBS's price target at 140. We're talking about 40% higher move here. So pretty good. If we can do that this year, that's a big winner for investors in 2024. What I want to see happen is this high back in 2023, all right, in 2013 be taken out. That will give you even more confidence. But I know we all don't want to chase stocks higher. So let's look at possible entry point. The market is selling off. We are seeing some weakness lately. So if we get a bigger sell-off, perhaps we can get some bargains here at Ralph Lauren. I'm going to draw the same kind of Fibonacci setup from these lows to highs, and I'm going to target the buy zone here, which is the 61.8 halfway back between, let's say, the 153 area and 159 area. 21-day, which is this green line, is moving right into that area. We have the 50-day, which is this blue line, which will probably be in that area by the time this were to come down. We might get the gap fill. What I want to do is see support in this area and then look for short-term targets back up here, perhaps before they report earnings next quarter. It would be concerning if the stock did break 140. I would think the 200-day moving average would be tested, and I have to reset my outlook, but I like it. 153 to 159. Okay, that's it for the chart. So what's important here? Future quarters, what to look out for. Those margins keep proving their demand for their products stay high. They beat on earnings, they beat on revenues, and their costs stay low to become more profitable. That is key for investors clearly. On the technical side, we want to see those prior highs be taken out from 2013. Then we can start targeting that 240, even 260 area. Okay, that's it for me and Ralph Lauren. Here is Nina with her pick.
Thanks, Jeremy. I'm Nina Mishra, and my pick today is Netflix, the streaming giant, ticker symbol NFLX. Remember Netflix? It was a part of the original FANG group, the stocks, market darlings with very high growth prospects. And this acronym was coined in 2013, and it was one of the best performing stocks in the S&P 500 index for a few years. Then it kind of lost its way, and it seems the company has been taking all the right steps lately, and it has found its way back now. So let me share my screen with you. I have a slide and some charts to show you. So here, Netflix reported a blockbuster fourth quarter. Results were way ahead of expectations. The streaming giant added 13.1 million subscribers, and that was versus about 50% ahead of the market estimates of 8 million to 9 million, and also its own guidance of 9 million subscribers addition. And revenues were also way ahead of estimates because the company's latest steps, its password sharing crackdown and recent price hikes, they have been benefiting revenues. And the company has been expanding its entertainment offerings. And they are now into live events, a lot of sports-related content. And they also recently announced a 10-year licensing deal with WWE. So the company, Netflix wants to become the main source of entertainment for American households. And the stock, in fact, surged about 10% after earnings. It's up about 23% year to date and about 63% over the past year, whereas its competitors, they have significantly underperformed. Their stocks have significantly underperformed Netflix stock. So Financial Times reported that the world's largest traditional entertainment companies like Disney, Warner Brothers, Discovery, Comcast, Paramount, they lost more than $5 billion in the past year from the streaming services, the streaming content that they are building to compete with Netflix. So it seems that Netflix is now winning the streaming war, and the company plans to spend about $17 billion on content creation this year. Let's go to the quote page on Zacks.com. And I wanted to show you some charts. So Netflix currently a Zacks rank number 1, strong buy stock. It has a for value because the stock is not cheap. It has surged over the past year. B for growth. Looking at the industry rank and sector rank, they look good. Sector rank is top 25%. Industry rank is top 44%. Now, I was talking about the recent results. You will see that if you go to detailed estimates tab, you will see that analysts have been raising their estimates for the company after it reported results. The estimates for the current year and the next year have gone up significantly. So I mentioned that revenues were way ahead of estimates, but the company has actually missed on earnings estimates. And if you look at the longer term price consensus and EPS price charts, you will see that it has so many red arrows, so many misses over the past 5 years. And you will see the big plunge in 2022 when, investors were very disappointed with the company, and the revenue and subscriber growth was decelerating. But again, then the company found its way back, it seems, and it seems that they are doing everything right lately. But of course, this is a volatile stock. This is something investors should remember. If you look at these charts, price consensus and EPS price charts for companies like Microsoft or Apple, those are just beautiful charts. You will see almost all green arrows. So with Netflix, you can expect higher growth, but a little bit of volatility too. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. And make sure to subscribe to all our videos so that you do not miss anything. And we will see you next week.